Welcome to Treasury One's weekly market review, and as expected, the minutes from the Federal Reserve's June meeting took centre stage last week. Almost all the Fed officials voted to pause in June to buy some time to assess the impact of its monetary tightening so far, which is a cumulative 500 basis points to date. Now, the cracks from the tighter monetary conditions are starting to pop up here and there. The non-farm payroll data published on Friday, while still reflecting a tight labour market, was softer than expected, but not sufficiently so to stop the Fed's plans to bump rates by a further 25 basis points before year end. This was also revealed in the minutes and is in line with market expectations. Now, this may force other central banks to follow suit, including the SARB, which, by the way, seemingly still has some way to go to pull inflation back within the target band. Meanwhile, in a recent radio interview, Governor Lesetja Kganyago said inflation has turned a corner and he expects CPI to come in below 6% soon. At the same time, the Bureau for Economic Research survey last week showed inflation is expected to remain stubbornly high for the rest of the year going into 2024. So, either way, the outlook for the second half of 2023 is difficult to predict with a number of countervailing forces. You have the SARB, which is likely to follow any rate hike put out by the Fed, while risk aversion and lower commodity prices will weigh on the economy. As recessionary conditions take hold abroad, exports will come under pressure, while a domestic recession will dampen demand for imports. Now, all of this could pile pressure on the rand, which already has a lack of resilience to external shocks. Speaking of the currency, it had a bit of a rollercoaster week last week, breaking through the 19 Rand to the dollar mark before dropping back into 18 Rand territory. Now, the up and down volatility was linked to markets pricing for prospective Fed policy making. These ever-changing expectations on the timing of the US rates pivot will likely continue to pump volatility into the market. Another aspect which could continue to swing the rand this week is the US CPI data for June, which is scheduled for release on Wednesday, and the consensus expects headline inflation to moderate somewhat, but the focus will really be on core inflation, which is set to pull back slightly to 5% year on year, and it's something that the Fed will take note of to gauge underlying price pressures. Other data out of the US this week is the Consumer Confidence Index for June, which is expected to show a slight uptick in confidence levels, and that's thanks to the strong labour market. Germany will also release its inflation figure for June this week, with expectations that it remains above the ECB's target, which then will just add support to market expectations of further hikes to come. Now, locally, both manufacturing and mining production data will be out this week, with a contraction expected in both numbers. Manufacturing continues to be hampered by the ongoing load shedding, while the Eskom crisis adds to the capital outlays in the mining sector, really reinforcing the reality that South Africa is an unattractive jurisdiction to deploy new exploration. The mining sector, already plagued by logistical headaches, could face further hurdles in the short term should the situation in KwaZulu-Natal and Mpumalanga deteriorate. Several trucks have been torched on roads which serve as arteries for minerals and other goods destined for export. Also in the headlines this week is the NATO summit. Now, the air is expected to be slightly lighter at the convention after Turkish President Erdogan's about turn at the 11th hour. Erdogan held out on Sweden's application to join the alliance, causing strife between member states while the Ukraine war raged on. Publicly, he held out due to claims of Sweden harbouring Turkish opposition, viewed as terrorists by Erdogan, and his request that the door be open for Turkey to join the EU. We also know that Turkey was awaiting approval on their purchase of fighter jets from the US. And although authorities claim there is no link between the two, Erdogan publicly gave the thumbs up on Monday, and less than 24 hours later, Biden's national security advisor confirmed Biden will now move forward with the transfer. So, whatever switched to Erdogan's mind, NATO enters the summit more unified than before, exactly what Putin did not want. That then the week that was, and the one to come for the markets.